The most recent interest rate hike made by the Federal Reserve to combat rising inflation marked the largest one-time increase since 2000 and was already the second increase of 2022, and more may be on the way. Feeder cattle producers are encountering near record high grazing land values, and fed cattle producers are experiencing high input costs and these feeder-to-livestock interest rates. Both are posing significant hurdles to profitability. Dr. Elliott Dennis, an assistant professor and livestock marketing economist with the Center for Ag Profitability here at UNL, joins me now for more. Hi, Elliott.
Yeah, thanks for having me, Ryan.
Thanks for being here again. First, can you just talk about the latest interest rate hike by the Fed and why it's not the first or likely last raise that they will issue this year?
Yeah, I think there's a general sentiment that the inflation is not something that's really temporary, and that it's something that's kind of long-term and that needs to be addressed by the Federal Reserve. And ultimately, they raised it by 0.5 point. And like you mentioned, this is the second time they've raised it, and they've also indicated that more are likely on the way. And that's just to indicate that this is more long-lasting inflation that needs to be controlled in the future. It's also important to note that this vote to increase the interest rate was unanimous, which is not generally common in the Fed Reserve. And so not only is it, we believe that inflation is a problem, but across all the different regions, we believe that controlling interest rates or impacting interest rates is the way to combat inflation.
So how does raising the interest rate impact ag lenders and then eventually fed cattle producers?
Yeah, so the Fed Reserve, essentially, when they adjust their interest rate, it kind of trickles down to everyone who they loan money to, ultimately coming down to the livestock producer. So the Fed Reserve, the different Fed Reserve banks basically track feeder livestock interest rates. And this would be something a little bit separate from operating loan interest rates. And there's really two areas that primarily track this: the Dallas Federal Reserve and the Kansas City Federal Reserve. And feeder livestock is really a combination of things, but it's the closest thing that we have to measuring what basically feedlots would pay for interest rates. It includes a lot of things such as feeder cattle, feeder pigs, feeder lambs, all that are expected to be fattened for slaughter. And so when talking with the Federal Reserve, they say most of this is likely in that cattle and some of it in hogs. And so we just need to be a little cautious with interpreting this, but really that interest rate is hovering between, if we look at the different areas, anywhere between 5.5 for the Dallas Federal Reserve, and about 4% for the Kansas City Federal Reserve. So, and this has been, these interest rates really change over time, and they're released on a quarterly basis. But really over time, what we've seen is a pretty steady downward trend. And since about 2008, interest rates have been, I would say, somewhat steady, which has provided some stability for the industry.
What about just the change in the last couple of years? Do you have a sense of that?
Yeah, so really since 2019, we saw, of course, the interest rates decreased once again. But beginning in really the pandemic, interest rates had started to level off. We're starting to see a little bit uptick in those interest rates, but it's really been kind of that policy over the last 18 to 20 months that to try to keep interest rates pretty flat until recent.
And as we mentioned, we also know land values have been going up as well. So what's the situation been for grazing land values here in Nebraska?
Yeah, so the University of Nebraska-Lincoln Center for Ag Profitability has been doing a land report over really the last almost 50 years. And in there, they separate out the different types of land and what people are willing to pay dollars per acre. And so what I did I just compiled all that information And really, there's two types of grazing land they track. They track grazing land that can be tilled or put into crop production, and grazing land that would be considered non-tillable. And really, these grazing land values are pretty constant until about 2006, and then with the ethanol industry kind of rising and kind of the stronger demand for land to be put in other uses, we saw a strong uptick in those land values. To give you an example, prior to 2006, land values for both grazing and grazing tillable and grazing non-tillable were somewhere in the range of $250 per acre. These numbers have spiked to their highest levels, almost $1,600 for grazing land that's tillable in 2015, and about $1,000 per acre for grazing land that's non-tillable. Of course, when after the last cattle cycle, those kind of came down a little bit, but they've over the last year and a half, they've really picked up again. You can almost look at it as a U shape. And for those listeners who are interested, there's a really nice figure that kind of really demonstrates these trends over time on the article.
Again, check that out on our website at cap.unl.edu. And Elliott, does there tend to be a relationship then between grazing land values and feeder livestock interest rates, or what does that tend to be?
Yeah, as we see, what we see is that as that interest rate starts to come down, it makes it cheaper to raise animals, because that cost of money is going down. And so there's really a strong negative inverse correlation or association between these. As it becomes cheaper, we start to see these land values go up. And interest rates are just one thing that are driving land value, potentially driving land value interest rates or land values. And so, but there's definitely a relationship, and we'll likely see that continue if those feeder livestock interest rates decline.
And higher land values, of course, translate often into higher cash rents. So what does this mean for the average cow-calf producer out there in the state, and what's the situation with grazing rents for the year?
Yeah, so the Nebraska Real Estate Report, also through the Center for Ag Profitability, also reports what these grazing rental rates would be, and they basically calculated on a cow-calf pair per month. And a cow-calf pair is typically considered to be 1.25 or 1.3 animal units. Animal unit being a 1,000-pound animal. And so if we were just to kind of look at what those average rates are, it's about $57 per cow-calf pair. And so what this would be for a 300 head cow-calf or 300 cow-calf pairs over a 5-month grazing season, total pasture costs would be somewhere in the 86 to 87,000 range. This is considerably more than what we were experiencing in 2007. As I mentioned, this past year was about $57 to $58 per cow-calf pair per month, and in 2007, 2008, it was $25. And so, as you mentioned, as these land values start to go up, it tends to pull cash rents up with them. And Nebraska tends to be one of the highest costs for pasture rental rates, and so that just further puts the strain on our industry to both be efficient and also be a good job at protecting profits where we can.
That's Elliott Dennis, assistant professor and livestock marketing economist with the Center for Ag Profitability in the Department of Agricultural Economics here at the University of Nebraska-Lincoln. Again, check out this article that he's written up on our website at cap. That's cap.unl.edu. Thanks so much, Elliott.
Yeah, thanks for having me. Hi.
Nebraska Farmcast is a production of the Center for Agricultural Profitability at the University of Nebraska-Lincoln. For the latest research-based information and education resources to manage your farm or ranch operation, visit our website at cap.unl.edu. That's cap.unl.edu.